Good morning, everyone. My name is Phil Goff. This is the Home Finance with Phil channel. Happy Friday. Today is December 15th, 2023. And if you're confused on your years, uh, this is our weekly market update. We take a look at the interest rates, what's going on just in the housing market, help us all make good, sound decisions for our clients and for ourselves. So let's go ahead and get some slides going here, and we'll get into this. We have good meetings lately because interest rate continues to go down, which makes us all super happy, I would think. So here's a look at our chart. So as you can see, we say every week that we do this, since mid-October, we've just continued to have a real positive trend in interest rates. This is kind of upside down, right? We think of interest rates as going down. Well, when it goes up here, that's showing that the market is in a positive movement stage, which means that the interest rates are going down. So to put that in the numbers, we have broken back down into the sixes. So as of this morning, again, Friday, our average 30-year fixed is 6.62%. And this is, of course, based on Mortgage News Daily. Averages are tough to say, and every situation is different. But if you just look at it as a whole, people paying points, people not paying points, all of that, these are the averages they're throwing out there. So the 15-year fixed is getting down closer to 5%. And so is FHA. So we're looking pretty good. And just so people have a pretty good knowledge as to where we were and where we're going and where we are now, if you look at the numbers that we posted from exactly the same place from Mortgage News Daily, back in mid-October, the average is 8%, and now we're down to 6.62. And the 15-year fixed also, I mean, we got a massive positive trend going here. These are some odds that are thrown out there, and this is not just one place. Lots of places, Forbes, Yahoo Finance, that you can go anywhere and you can see that they are expecting the Fed Reserve to cut rates. So this is just an idea of put into a chart of expectations and ratios. So they're saying as soon as March, there's a 60% chance that the Federal Reserve will start lowering the rate, the baseline rate, which will pay dividends big time in what we see for what we can do for our clients. And they're also saying a 99 or 100% by July and September. So where this is coming from, just so you all know, it's coming from inflation. So we're seeing inflation numbers start to come down. We have for a while, but we're always on a lag. You can see that the information in this chart, even this is job openings chart, you're seeing it start to decline, but we're still looking at September numbers. There's always a 2 or 3 month lag because it just takes time to get all that data together. So as of right now, we've consistently seen jobs openings go down. So what's happening is people, as they get laid off, which is unfortunate, what's even more unfortunate is they can't find jobs. So it's not so much that we have a massive amount of people getting laid off, but the people that are, what they're saying, what the economists and everywhere I hear is saying, is they're having trouble finding jobs. That's one important aspect to interest rates in our world, because the economy needs to be less booming. And the best way for them to do that, and the best way for people to not spend extra money to help inflate prices, is for people to lose jobs, which is very unfortunate, but it's the reality we're living in. You can see it here in the consumer price index. So we're in the 4% range when you take away food and energy. So the same food and energy actually is going down. All the items together were in the 3.1% range. So the Fed wants to see this around 2%. But if you look at the chart as to where we were like back in July of 22 all the way till now, we're showing a clear decline. So we're seeing declines everywhere. So these are all positive news for us. It goes into this slide here where we talk about home buyers are starting to lose patience. They've been sitting on the sideline for way too long. And so those of us in our positions have been saying, don't sit on the sideline at all, because house prices continue to go up. They might have gone up too high and they jotted down just for a month or so. But in the long term, you're not going to be able to buy the same house now for the same price as you will in 6 months or a year. It's going to be worth more money. So, but the good news is they're starting to say, you know what, we're tired of waiting. We're going to come back in. So if you couple that with the idea that interest rates are going to continue to lower, we might see kind of a snowball effect where that tipping point hits and people start entering the market, which would affect both houses for sale and buyers, right? In a weird, odd note, millennials apparently feel like they need a whole lot of money to be happy. So this is from a business insider. I just thought it was kind of funny. So Gen Z seems kind of normal in line. Hey, we can be happy with $128,000 a year. Gen X, 130 make me happy. The boomer generation, 124, Millennials, no, I need 500,000 every year to be happy. So, and I believe most of our clients right now are in the millennial stage. They're there. So it's just something for expectations and just kind of a funny note. I mean, I would be pretty happy with $500,000 a year too. So any realtors that want to call me and help me achieve that dream, that would be highly appreciated. But in all other things, let's just go ahead and stop the share and end this. Okay, so it is Friday. It is close to Christmas. I'm not a Hanukkah guru, but I believe Hanukkah has either started or is very close. I'll look into that for my Jewish friends. And, I will still be around. My team will still be around, even though it's a little slower. We're here to help everyone as things start kicking back up. So please give me a call. Don't be shy. Even if it's Sunday, let me know. We're here to help. And we appreciate you watching the show, channel, whatever it's called. And hopefully everyone has a great weekend and gets all their holiday shopping done. Appreciate it.